It's time for our fan favorite, Top That Trade. Joining us now, Phil Flynn, a Fox Business Network contributor, and Ellen Nuckman, an options trading pro. Here we go, guys, with round number one. Making bacon inventories at the highest level since 1971. What will this mean for pork prices?
First of all, record bacon is never a bad thing.
Never a bad thing. I love bacon.
Let's just get that out there first.
All right,
anything with bacon. But you tell me about the fundamentals, what's happening in China, and why this whole situation's happening over there.
Well, part of the U.S.-China trade war here is keeping the bacon here when they need it in China. And China, of course, has the Asian swine fever, which has wiped out millions and millions and millions.
So we need to put bacon on the boats and send it on over, right?
Right. In fact, if we don't get it over there, the Chinese economy is really starting to suffer because it's caused inflation.
Right.
And
they're
China's
big on pork.
crazy.
Okay, I hate to turn it, but that's what I do here.
Okay.
This is a chicken equation because I saw this week that China's going to look to start importing more chicken to offset the pork.
Oh, so this sounds like a quid pro quo.
So the chicken prices had a big bounce, and the companies I like Sanderson. Sanderson's been between 130 and 160 now since April. That target's 190, and Tyson between 75 and 95 since May. So that target's 95. So chicken is where it's at because with low grain prices, the chicken producers, if they can get those export markets going again, are in great shape.
You do realize Tyson does pork as well.
Oh, well, yeah, they do everything.
That's what I'm saying.
Round number two, previous plunge. What a difference a year makes. The stock market is up compared to a year ago. What does this mean, and what do you make of the move?
Yeah, last year was ridiculous, totally ridiculous. And it was a market that felt like dominoes.
Yeah, the December drop.
Yeah, the December drop. And it started in October.
Right.
What do you think was the main reason for the reversal of the market? We had a great bull market. Everything was going good.
Fear itself.
Well, it was basically
fear. You had only the fear of fear itself, and that's what happened. People just got too fearful, and it's like you said, it was a snowball rolling down the hill, and it hit stops, which had send more selling, and it was ugly, but you need the market to go down so it can go back up.
Well, yeah, and it came back in an incredible way. We went to record highs, but the real main thing was oil. And it was when President Trump basically told the world he was going to put sanctions on China, and he granted waivers that caused oil prices to crack. And that was the main reason why oil went. But stock traders looked at the drop in oil and say, maybe the economy's slowing. It really wasn't.
It was just a worry.
It created
unfounded
that fear.
fears.
And one fear led to another, and before you know it, we were in a fear of fear.
With the stock market heading back up, will that bring oil up with it? That's the question. That's what I think.
I think it will, too, as well. The oil prices may have struggled here a little bit this year, but ultimately...
Opportunity.
We keep hearing about an oil glut, but if you look at oil supplies, they're barely at the average range.
Again, I think there was too much fear in the oil market as well, that the global growth was slowing too much, which, I think we're okay.
It could have been because you went to an electric bicycle, too. That could have created an amazing fear.
Round number three, buybacks. The number of buybacks are slowing down. Does this mean bye-bye to the stock market rally?
Buybacks are not always good for the stock. I mean, we can have a lot of examples, but obviously GE is a great example. They spent $10 billion, and where'd that stock go?
Nowhere.
So it doesn't always elevate the stock, but sometimes people have the perception that it can help support the market. We spent $710 billion in 2019
There are
on stock buybacks.
in political parties that really want to outlaw stock buybacks, which is ridiculous. I don't understand their point.
They would like to go back to where we were before Reagan. So, sometimes, some people want to go back.
They want to go back to the future. We can go back to the future. Go back to the 80s. The 1980s want your stock buybacks back.
The stock buybacks are down 18% this year, 18%. So, I don't know if that's impacted the market at all. We did make all-time highs. So it's something to talk about, but it doesn't help the stock necessarily.
Let's talk about when the stock buybacks were hot. And we talked about this when it started to happen. What did that tell us about the market? It told us that the CEOs believed in their own stocks and believed in the stock market. And when those stock buybacks were going crazy, everybody's complaining, they're doing the wrong thing. Heck, it should have been a signal to you that if every company wants to buy back their own stock, you should be doing the same thing. It means they have
a lot of money. That means they're making a lot of money. That's what it means.
Thank you.
On to your bonus round question for today. Tick-tock, time to push back that clock. Can you spot the one true ticker? Is it hand, tick, or tock?
Hand.
Oh, the hand.
What does hand have to do with that?
Well,
Hand on a clock?
Yeah, back in the olden days, they used to have hands on clocks.
I saw it with my digital. I got my digital
I'm going to teach you how
from
to
middle school. From middle school, because
we'll teach them how to
I don't
read a clock
understand
someday,
how
the old-fashioned clock.
I don't understand how these things go round. The real one is talk.
Well, then I'll go with tick.
The answer is tick.
Thank you. Woohoo!
Time for us to move along. Business First AM continues right after this.